Hey traders, have you ever traded a chart that looked like this? If so, you're going to want to make sure you join me for the entire video today as I talk about simplifying your technical analysis along with what it really takes to be successful in this trading business. Hey guys, Akil Stokes here, Chief Currency Analyst and Head Trader at TradingPower.com, and thank you once again for joining me for another weekend review video. Thank you too for you guys that have been joining in each and every day for the new video I've been experimenting with, my morning rant. Now that's more of a success and motivational type of daily video that I want to produce. In these videos, we're talking trading and we're going to help you hopefully get a little better and be a little more informed about the markets once you leave this video than you were when you first joined. Now, we're going to get to the charts in a little bit and talk about some technical analysis and how to simplify your trading and not have it look like the chart I showed you earlier. But first, I want to read something for you that I found to be very powerful, and it deals on the topic of success. And this was shared with me from a good friend of mine, Bob Vasile. You guys have heard me mention his name before. We run a leadership program over at Millersville University. And I think this directly relates to us as traders as well. It's a few paragraphs, but trust me, this is the important stuff. The charts later, you don't really need to know that. The important stuff is the psychology. That's what's going to determine whether you're a successful or a failing trader. And this says, the title is Winning is Doing a Lot of Little Things Right. There is a saying I have. Winning is doing a lot of little things right. Not a few things right, not most things right, a lot of things right. The reason there are so few winners is because most people aren't willing to do a lot of little things. It's hard. It takes focus. It takes time. However, if you're willing to do a lot of little things right, more times than not, you'll end up winning. There are times when winning takes more intelligence, more strength, or more experience than what you have. Then again, sometimes winning simply takes more grit. What is grit? It's tenacity, perseverance, stick-to-itiveness. Yes, that's a real word. It's not giving up when the battle gets tough. You know, when the battle gets tough, many people bow out just because they aren't willing to go the distance. Think about it like this. Someone else can be smarter, tougher, or more experienced than you are, and you can still beat them. We see this all the time in trading, right? All because you didn't give up. Is grit a predictor of success? At least one study thinks so. The results were featured in a highly popular TED Talk. He shares a link for that. It goes on to say, grit is not typically something you can turn on and off. Once you quit, you're telling your subconscious it's okay to do so. It's like your brain telling you, it's okay, you've done this before. I'll come up with excuses as to why you quit. Unfortunately, you start to believe those excuses once you decide, Once you decide to repeatedly quit, you're forming neural pathways in your brain that program you to quit even more. Quitting then becomes easier and easier and easier. The same holds true for not quitting. You can form neural pathways that enable you to overcome just about anything. Once this happens, you virtually never give up on anything. What's even better is that you gain a reputation for your drive, your tenacity, and your perseverance, your grit. The average person won't want to challenge you because they know you're in it for the long haul and you won't give up. You've won before you've even started. When you have grit, it's not in your nature to do things because they're hard. So you do little things that others don't, and you do them right, and you do them a lot, and you win. Why? Because winning is doing a lot of little things right. And this directly relates to a pretty good rant I went on in my live trading room about seeing trading as a success. A lot of traders want to find a shortcut. They think there's one secret strategy out there that's going to get them trading glory. Like the chart I showed earlier, they think it's adding this magic indicator plus that magic indicator plus this magic indicator. And once I find the secret formula to where all the indicators align and the stars line up, then boom, I'll be an overnight trading sensation. And that's not true. The real truth to trading success is this. It means working hard, doing the little things right over an extended period of time. And it means doing those very simple things, learning the basics. We talk about this in week 1 of the 12-week transformation, learning how to read a price chart. Be honest with me for a second, guys. I would bet many of you watching this know how to identify a Gartley pattern, but can't tell me whether a market is bearish or bullish. Would I be right? Be honest with yourself. Look yourself in the mirror. I was like that. I knew how to trade advanced patterns, but I couldn't tell you if the market was bearish or bullish. It's knowing those little things, those foundational elements of trading, of technical analysis, mastering those little things, and then once you get your experience, being able to do them over and over and really finding the clues that the market leaves. And we had a good example this week of a trade on pound dollar. I was going to give you a live example of technical analysis, but Draghi and the ECB kind of messed everything up today chart-wise. So I'm just going to give you an example of a trade we took earlier in the week. And I'll actually start by showing you a video that I sent to my syndicate members explaining my thought process and why I took the trade. Originally, we were looking at the 4-hour chart on pound dollar. And I think Jason even might have mentioned this morning in his war room meeting. We're looking at the 4-hour chart in the pound dollar, and we're looking for a trend continuation opportunity. For you guys that are new to the 12-week transformation training course, this is our week 1 stuff. Boom, new structure low, outside return, new structure low. When we go through our IPDE process, identify, predict, decide, execute, we know that the lower low, lower close has us thinking trend continuation to the downside, and we should expect an outside return and ask ourselves, where can we get involved? So we saw the outside return come up into this level, come up into our previous structure level. We have some Fibonacci's there as well. They didn't really play that much of a role into my analysis, but we did have some Fibonacci's up there, 382, for you guys familiar with the Fibonacci failure technique. But we also had some hidden diversions at the time, and hidden divergence is essentially, I don't know if I want to confuse you guys too much. Essentially, you look for hidden divergence when you're looking for trend continuation opportunities. So you see that we have a string of lower highs here. We have our high right here. We have a lower high right here. However, on the RSI, we have higher highs. That's called hidden divergence. Mostly when we look at divergence, we're looking at it for counter trend trading opportunities. So we're looking at regular divergence. Again, hidden divergence is used for trend continuation opportunities. So I was looking for a short at this area. Couldn't find one on the hourly chart. But what I did was I went down to a range bar chart during my day trading hours. And we're watching the market ebb and flow. I love watching the range bar charts because, again, you just see this, look at the smoothness of price action. And essentially, we looked for a second chance trend continuation opportunity. Again, swing high to swing low, outside return, swing high to swing low. We put in a complex pullback right here for you guys that are Elliott wave people. We put in a complex pullback right here, back up the structure. We also used our advanced pattern recognition to point out a Gartley pattern. This gave us an aggressive buying reason, at least gave me an aggressive reason to get short. And we got involved right up here and sold it all the way down. So hopefully that gives you guys a better idea of not only what we're looking at, but kind of the process we went through when breaking down this particular trading opportunity. So we're back on the pound dollar right now, and I'm actually on tradingview.com, which is a site I like to use when I'm too lazy to load up my NinjaTrader charts. But I like the fact that you can kind of take pictures of trades before it happened and then click this little button over here, and it shows you the result of that. It's just, I don't know if it has any other significance aside from looking cool, but I like it. But I want to take a look at the pound dollar and also another trade involving a similar technique. Now, the pound dollar trade, remember, this was a 4-hour trade, and we're looking at the market reversing right inside this area. This was the candle right here, if you can imagine. Now, just because the move has happened doesn't mean that all of the opportunity on this pair is over. And again, we don't have to load up a million and billion different indicators to give us a reason or a signal that the market wants to go short or long. We just use the simple skill of reading a price chart. And again, this is the first stuff we teach and we try to get our clients to master. We're looking at swing high to swing low, outside return, new structure low, outside return. We caught the move down here, made a little profit. For you guys that are in the syndicate, you know we've only been taking target ones, but I made a little more profit on this on the extension. And now what did we just put in? I'll give you guys a few seconds to answer. Yeah, we put in another outside return. Guess what? It's another opportunity to get short at this area and catch another potential move. If you're wrong, you're wrong. You get stopped out for a minimum amount of pips. If you're right, you make another big winner. And you can see I didn't even look at the RSI this time. There's no moving averages. There's no Fibonacci's. It's just support and resistance, reading price action structure, no advanced patterns. And it's important that you guys master this, because one of the important parts about trading, especially as you begin to grow your business, is you can't just be a one-trick pony, in my opinion. You can if you're only trading for yourself, but we have a lot of traders that I work with that want to go on and grow their business. And we have a few traders that actually, we've had a big year this year of traders going on to work for prop firms. One recently is as recent as last week. I actually got the email this week, so I assume last week is when he got hired. And I don't know how this particular firm trades. Many of them want you to trade their style, at least in the beginning, until you kind of make a name for yourself. So, you have to have an overall understanding of how a price chart works, how the market moves, if you want to adapt and take those skills and really take your trading business to the next level. Now, real quick, this was a trade that Jason Greystone actually shot over, or he was involved in this week. Same technique. You can see we explained this already, but same thing. Reading a price chart, initial starting point right down here. New structure high, outside return, new structure high, outside return, new structure high, outside return. He happened to find an advanced pattern. If we go down to the hourly, and this is going to be a bat pattern, he happened to find an advanced pattern hiding within that outside return. And what he did was he took it as a bat pattern, used that as his entry reason, and was able to shoot for extended targets with this, and ended up banking, over 150 pips. Now, he did some other analysis to determine where exactly he should take targets at up here. But he was able to get 150 pips out of a trade that really should have earned him 20, 30 maybe. I'm not sure. 40 pips max. But it's all because of that basic knowledge of how the market works, how the market moves, and being able to read the trend and really what direction the market should continue in. So it's pretty cool. That one didn't go over to the Syndicate. Again, that was Jason Greystone's trade. He talked about it in his London live room, which has been fantastic, by the way. But a good example of two different traders using a similar technique. And for you guys that are new, Jason Greystone is he's running a live room for us now, a London session live room, which is great because a lot of traders were up late at night joining me. But he's a former client, guys. He's a 12-week transformation member. He's someone that spent, I think, tens of thousands of pounds on trading courses in the past. Finally hooked up with Trade Empowered earlier this year, graduated the course. But it heads with me a lot in a positive way, just because he was really focused on learning and he's really driven. And he ended up becoming a full-time trader, and now he's getting into the education business as well because he wants to share his knowledge with others. So it's a great story, and this happens all the time. Now, speaking of Syndicate, I did tell you I would share with you guys a Syndicate curve. We're having a pretty poor week this week so far, and essentially we're done trading for the week with non-farms being tomorrow. So this percentage is gonna go down once I plug in the next numbers, but we're still up about 68% for the year. So really close to 70% for the year. It's been a good year. You can see we had the summer funk where we just traded sideways for about 20 weeks straight. I know, sounds like a lot, right? It was a real battle, a real test of grit, a real test of trading character. But as we said the whole time, hey, you just got to trade through it. You got to work through those things. You double check, make sure you're not doing anything wrong. Sometimes the drawdowns just hit. Matter of fact, drawdowns always hit. We just never know when or for how long. And this one happened to be an extended one. But it was a good example to the traders that have been following us in the Syndicate program all year of how you can start off the year really great. Things may not go your way for a while, but instead of panicking, you stick to your guns, you dig your heels into the ground, and you fight through it. And as you can see, there's a big pop on the other side. So a great example for those traders of kind of the ups and downs, not just monetarily, but emotionally as well, that a trader goes through on a year-to-year basis. And next year, the same thing's going to happen again.
So we'll see. But this is an updated curve for you guys. And if I do a blog post this Sunday, I'll give you the new numbers after this week. We should go down a little bit, but we're not gonna go down too much.
All right, so at the very end of this video, guys, I'm going to include a rant that I did in this week's live room, which kind of followed up on my last week in review topic of demo trading versus live trading. I do want to say thank you guys for joining me. As always, it's a pleasure to hang out with you guys. Every time you hit that like button, every time you subscribe, every time you comment and share this with a friend, it helps me out and really gives me more motivation to keep producing these videos. Again, this is something that each and every year I contemplate doing it or not. It's something I don't have to do, but it's something I like to do, and it really sticks to why I got started in education. I'm not in education for the money. Don't get me wrong, you can make a lot of money being in the trading education business. You can make even more money just trading and managing money for others. But one of the reasons I got involved was to give back, to help others, to kind of empower. It's my form of motivational speaking in a way with, I guess, a skill set related to it. So I always remind myself of that. And every time you guys leave a nice comment, it's like, hey, Akil, you're doing this for the right reason, despite what some of the naysayers say. So thank you for that. I will see you guys next week. Make sure you're joining me every day for my morning rant video. That means following me on Twitter at Akil Stokes RTM. And of course, I've been posting them to YouTube as well. Just check underneath for the playlist that says my morning rant. It's about a 5-minute video, just kind of sharing my thoughts for the day, more of a motivational empowerment type of deal, not chart looking or anything like that. So anyway, until next time, guys, plan your trade, trade your plan. Good luck in the markets next week, assuming you're staying out of everything tomorrow. And I'll see you guys for the next video.
Yeah, Darren invented the cipher, guys. He'll never tell you because he's humble, but he invented the cipher. I don't know if I believe that. I think money management is necessary even while you're learning to trade. No. Here, let me answer this. If you can't trade, what's the point of money management? How is it necessary if you can't trade? If you're not making money, what difference does money management make if you're not bringing in a consistent return? I answer that to you. If you're not making enough money to increase your position, you're not even using money management. To hold on to the demo money you had, demo money doesn't matter. Who cares about demo money? You can go broke and just start another demo account. Demo money is different than real money. I did a video on it the other day. Big differences. It's good to get started. Don't get me wrong. It's good to have a demo account and get started and get used to things. But there is a massive difference between a demo account and a live account. Again, check my YouTube. You will have to disagree. Well, that's fine. I will tell you this. There is nothing that simulates the emotion of losing and earning real money like actually losing and earning real money. There's no way. There's a big difference when you're down 100 pips on a demo account. There is a massive difference psychologically from being down 100 pips in real life. That is the difference. Anybody can hold out a trade in a demo account when they're down 100 pips. Why? Because if they lose 100 pips, it doesn't matter. They don't lose anything. There's no pain. It doesn't matter. It's not their money. You're losing 100 pips on a real account with live money. You're talking thousands of dollars for some of you. Oh, you can't tell me that doesn't hurt. You can't tell me that doesn't hurt. Vice versa. Let's say you have a target that is 100 pips away. You're on a demo account. Your trade is up 90 pips. You're 10 pips away from your profit target. And the market starts to reverse. What do you do in a demo account? We'll get there. It's okay. It doesn't matter. In a live account, you're up $900. You're 10 pips away from your profit target. And you start seeing that money get sucked away. You can't tell me there's not an emotional pull that's different than a demo account. No one can tell me that. You cannot tell me that demo trading is the same as live trading. Not at all. You can use the same strategy, the same technique, the same method, but it is not the same emotionally. It is not the same psychologically. I don't care what you say. I 100% disagree with that. No way. There's no way the pain of losing demo money is the same as losing real money. No way. Damn right I'm fired up. And I usually play the fence. I'm usually like, okay, yeah, your opinion is your opinion. I 100% disagree with that. And this is someone that has blown demo account after demo account, has blown real account after real account. This is coming from someone that has went to a real account, has traded on a demo and said, I'm trading this demo just like I would a real account, and then have used real money and blew it all because of stupid emotions. Moving stops because I'm scared. Taking targets early because I'm scared. Removing targets because I'm greedy. And paying the price for that. It's nothing like it. Nothing at all. Think about how many positive demo traders are out there. How many demo account kings are out there. Think about how many people lose money when they start trading real. Why? What's the difference, right? How can you make money on a demo account but lose it in real life? What's the difference? It's not the broker. It's not the market going after your money. It's you and the mistakes that you're making because now you got all emotional about it. Now those red numbers are bothering you, where before it was just okay. Nothing like it. So real quick before we take our break, again, we talked about money management. Here's a quick example of money management. Once you're consistently profitable, here's what you can do.